Hey everyone, welcome to Professor FinTech. Here's a question for you. Have you ever finished recording all your business transaction, neatly entered everything into your ledger accounts and then thought, okay, but how do I know I haven't made a mistake somewhere? That's right. That feeling, that nagging doubt, every bookkeeper and accountant in history has felt it. And the answer, the tool that solves that problem is called a trial balance. And today I'm going to show you exactly what it is, how it works, how to prepare one from scratch, how and why it matters, using examples so simple and so relatable that even if you never studied a single day of accounting in your life, you will totally get it. We have got the story of Sarah's Cafe, a household budget analogy, a piggy bank example, a full worked exercise and quiz at the end. So hit that like button right now, grab a pen and paper, and let's get into it. Here's our roadmap for today. 6 sections, each building on the last. We will start with the what a trial balance actually is. Then we will dig into how it works. The whole debit credit thing made it super simple. After that, I will walk you through the exact 3 steps to prepare one. Then we will talk about why it matters so much in real business. We will look at 3 real life everyday examples, including a piggy bank and coffee shop cash register that will make this concept click instantly. And we will finish with a quiz. 3 questions to test what you have learned. Ready? Let's go to the section 1. Alright, what is a trial balance? Let me start with an analogy that everyone will relate to. Imagine it's the end of the month. You open your banking app and check your statement. You see all your deposits going in, salary, freelance payments, and others, whatever. You see all your withdrawals going out, groceries, rent, Netflix subscription, that coffee you really didn't need. Now you ask yourself, does the math check out? Do my deposits minus my withdrawals equal the balance showing in my account? If yes, you are balanced. If not, something off, you need to find it. Trial balance does exactly that, but for an entire business covering all of its accounts. Here's the official definition. A trial balance is report that lists all ledger accounts and their debit or credit balances at a specific date to verify that total debits equal total credits. Let's unpack that. List all ledger accounts, every single account, cash, sales, rent, equipment, loans, all of them. Debit or credit balances. Each account has either a debit balance or a credit balance, depending on its type. Verify total debits equal total credits. This is the key. In double entry accounting, every single transaction affects two accounts equally. So if you have done everything correctly, your total must match. Now, where does the trial balance sit in the overall accounting process? Let me show you the full picture. Step 1, business transactions happen. Sarah sells a coffee, pays rent, takes out a loan. Step 2, each transaction gets recorded as a journal entry. Date, debit, credit, description. Step 3, those journal entries get posted to individual ledger accounts. One page for cash, one for sales, and so on. Then step 4, this is us today, the trial balance. Take all those ledger closing balances and put them in one report to check the balance. Step 5, only after the trial balance is confirm do we create the final financial statements, the profit and loss, and the balance sheet. The trial balance is your safety net, your spell checker, your quality control gate. It stops errors from sneaking into your final reports. And here's something to think about. Drop your answer in the comments below before we move on. Can you think of a time in your own life when you had to balance something like a checkbook, a cash envelope, a school truck shop? That's the same principle. Before we prepare a trial balance, we need to make sure we are comfortable with debits and credits. Don't worry, I'm going to make this painless. Here's the simplest way to think about it. Imagine your household budget. Every month, money comes in. Your salary, a bonus, birthday money from grandma. That's your credit side. Money coming in, income, value flowing into the business or account. Every month, money goes out. Rent, groceries, electricity, that impulse purchase. That's your debit side. Money going out. Expenses, value flowing out of the business. And here's a memory trick that helped me. the word deal. DEAL. D stands for dividend, increase with debits. E stands for expenses, increase with debits. A for assets, increase with debits. L stands for liabilities. Under liability, equity and revenue increases with credits. DEAL, deal. Write that down. Screenshot it. Tattoo it on your arm, whatever it takes. So in the trial balance, each account appears on whichever side it naturally lives. Assets account usually have a debit balance. Expense account usually have a debit balance. Revenue accounts usually have a credit balance. Liability accounts usually have a credit balance. Equity accounts usually have a credit balance. And the golden rule, the rule that has governed accounting for over 500 years. Total debit must equal total credits. Always, no exceptions. If they are equal, your trial balance is balanced and you can move forward. If they are not, you have an error somewhere and you need to find it before analyzing, before anything else. Okay, now let's actually do this. How do you prepare a trial balance? Three steps. That's it. Step one, list all accounts and their balances. Open your general ledger, whether that's a physical book or accounting software, and list every single account that has been used. Cash, capital, sales revenue, rent expense, equipment, bank loan, everything. And next to each account, write down its closing balance and note whether it's a debit or credit balance. Assets and expenses will almost always be debit balances. Revenue, liabilities, and equity will almost always be credit balance. This list becomes your trial balance. Step 2. Total the debit and credit columns. Now add up all the debit balances, just the debits, get one total. Then separately add up all the credit balances, get one total. You should now have two numbers, total debits and total credit. Here comes the step 3, compare and check. Now the moment of a truth. If total debits equal total credits, congratulations, your books are balanced. You can move on to preparing financial statements. If they don't match, don't panic. It just means there is a mistake hiding somewhere. We will look at where it to find it in a moment. Now let's see all three steps in action with Sarah's KP. Sarah starts January with this transaction. January 1st, she invests $50,000 of her own money as capital. January 2nd, she makes $5,000 in coffee sales cash. January 3rd, she pays $2,000 rent cash. January 4th, she pays 1,000 of her supplies cash. These transactions get posted to individual ledger accounts. Her cash account ends up with a debit balance of a $52,000 because she received 55,000 in total and paid out $3,000. Her capital account has a credit balance of a 50,000. Sales revenue has a credit balance of a $5,000 and rent expenses has a debit balance of a $2,000. Supplies has a debit balance of a $1,000. Now she transfers those balances into the trial balance debit column. Cash 52,000 plus rent $2,000 plus supplies $1,000 is equal to $55,000. Credit column, capital 50,000 plus sales revenue $5,000 is equal to 55,000. So $55,000 equal to 55,000. Sarah's books are balanced. Here's a quick pause moment. I want you to grab a piece of paper and try writing out that trial balance yourself from memory. Just the account names and which column they go in. Pause the video, do it, then come back. Done? Great. If you got all 5 accounts in the right columns, you have just prepared your first trial balance seriously. Let me give you 6 powerful reasons why the trial balance is not just a formality. It's one of the most important tools in all of accounting. Reason number 1, catches errors early. Every accountant makes mistakes. The trial balance is designed to find them before they contaminate your profit and loss statement or balance sheets. It's your early warning system. Reason number 2, build stakeholder trust. When a bank is deciding whether to give Sarah a business loan, they want to see her financial records balanced. Accurate books tell them this person knows what she is doing. We can trust her. Reason number 3, supports better decisions. You can only make good business decisions with good data. Is Sarah spending too much on rent? Is she profitable? These questions require accurate financials, which start with the solid trial balance. Reason 4, legal and tax compliance. Tax authorities want accurate records, so do government auditors. A clean trial balance helps protect you legally and makes tax time significantly less painful. Reason number 5, speed up financial reporting. When your trial balance is clean and verified, building the income statement and balance sheet is quick and straightforward. Skip the trial balance and you risk building those reports on a shaky foundation. Reason number 6, the discipline of regularly preparing and checking a trial balance creates a culture of accuracy and accountability in your business. Put simply, no trial balance means no confidence in your numbers. And no confidence in your numbers means you are flying blind as a business owner. What happens when the two totals don't match? This is more common than you think and it's completely fixable. Here's your detective checklist. 6 common culprits. First, missed entry. You recorded the transaction in journal but forgot to post it to the ledger. Solution: go through your journal entries and tick off each one against the ledger. Posted wrong side. You put a debit on the credit side or vice versa. This error actually doubles the imbalance. If you miss post $500, your trial balance will be off by $1,000. Wrong amount. You wrote $2,500 in the journal but posted 2,050 to the ledger. Always trace amounts back to the original source document. Duplicate entry. The same transaction was entered twice. Look for duplicate amounts on the same date. Arithmetic error. You simply added the column wrong. Use a calculator, add it again, then add it third time. Wrong account used. You posted rent payment to the equipment account instead of rent expense. Check account names carefully. Here's a trick accountants love. Check the difference between your debit and credit totals. If it's divisible by 2, you likely posted something to the wrong side. If it's divisible by 9, you likely have a transposition error where two digits were accidentally swapped, like writing 54 instead of 45. Now let me give you 3 everyday examples that will make the concept stick forever. Your household budget. Every month, money comes in. Your salary may be some side income. Every month, money goes out. Rent, food, utilities, entertainment. At the end of the month, you check does money in minus money out equal the change in my bank balance. If yes, your household accounts are balanced. You haven't missed anything. That's exactly what a trial balance does for a business. Just with more accounts and higher number. Example 2, the piggy bank. You start with an empty piggy bank, $0, right? $100 goes in for your birthday. $40 comes out for a new game. $60 goes in from doing chorus, right? At the end, $160 in total. $40 out, so $120 should remain. You shake the piggy bank, you count $120. It matches. Balanced. You haven't written a single journal entry. Your ledger accounts work identically. Every account has a money flowing in and out and final balance that tells you exactly where things stand. Example 3, the cash register. At the end of a day's trading, a good shopkeeper counts the physical cash in the register. They add up all the sales receipts, that's income, the credit side. They deduct any refunds or float withdrawals, that's the debit side. If the physical cash matches the calculated balance, the register is balanced. If does not, there is a problem. A missed sale, a wrong refund, or unfortunately sometimes theft. A trial balance is the same balancing act applied to the entire business. So whether it's your bank statement, your piggy bank, or a cafe cash register, you have been doing trial balance thinking your whole life. You just didn't have the accounting word for it. Quiz time. 3 questions. Pause after each one. Think about your answer, then unpause to check. Ready? Question number 1. What does it mean when total debits equal total credits in a trial balance? Answer is B. The books are mathematically balanced. This means there are no arithmetic errors in your posting. It does not mean the accounts are 100% error free, There are some errors a trial balance can't catch, which we will mention shortly, but it does confirm the math checks out. Question 2. At which stage of the accounting cycle is the trial balance prepared? Answer is C. After ledger posting, before financial statement. It sits exactly in the middle of the cycle as the quality control checkpoint before you present your numbers to the world. Question number 3. Sarah's trial balance shows debit $47,000 and credit $50,000. What should she do first? Answer is B. Look for a $3,000 posting error. The $3,000 gap means something has gone wrong. Maybe she forgot to post a $3,000 transaction or posted $1,500 on the wrong side. Either way, the detective work begins. How many did you get right? Comment your score below. 1 out of 3, 2 out of 3, or perfect 3 out of 3. I genuinely read every single comment. Let's lock in your 6 key takeaways from today. These are the things I want you to remember long after you close this video. First, a trial balance lists all ledger accounts balance at a specific point in time. Second, the golden rule. Total debits must equal total credits. Always. Three, it comes after ledger posting and before financial statements in the cycle. Four, it catches arithmetic errors, duplicate entries, and wrong side postings, but it does not catch transactions that were missed entirely or errors where two mistakes cancel each other out. Fifth, think of it as a balancing your household budget, your piggy bank, or your cash register. You have been applying this principle your whole life. Sixth, an accurate trial balance leads to trustworthy financial reports, which leads to better business decisions. Here's the big picture one more time. The full accounting flow from transactions all the way to financial statement with the trial balance as the crucial middle point. And this chart shows the most common errors that the trial balance actually catches in practice. Arithmetic errors are the most common, 35% cases. Wrong side posting comes second. If your books don't balance, those two are the first places to look. And remember, there are errors the trial balance will catch and errors it won't. Knowing that this distinction is what separates a beginner from an advanced accountant, and that is the trial balance from start to finish. Concept, steps, work example, real life analog, troubleshooting, everything. If you feel like you have actually understand this now, honestly, take a second to feel good about that. A lot of people spend weeks confused by this concept. You just got it in under 25 minutes. If this video added any value to you whatsoever, please like it right now. It takes 2 seconds and it genuinely helps this channel reach more students who need this content. If you have any questions about anything we covered or anything accounting related to at all, leave it in the comments below. I personally reply to as many as I can every week. And if you are not subscribed yet, click that subscribe button and the bell icon. We put out new accounting and finance lessons regularly, all designed to be this simple and this practical. Your homework before the next video using Sarah's cafe numbers: $50,000 capital, 5,000 sales, $2,000 rent, 1,000 supplies. Prepare the trial balance completely on paper from memory without looking at your notes. If you can do that, you truly understand this concept. Share a photo in the comments. I love seeing your work. In the next video, we are going to take Sarah's trial balance and use it to build the income statement and balance sheet. We will see exactly how those final reports come together from the numbers we prepared today. It's going to be just as clear, it's just as practical, and it's just as example driven as this one. Thanks for spending your time with me today. You are doing great. See you in the next.